Hello, hello, hello. Happy Friday. Shortened trading week. Final Friday before we really kick it off again next year. How is everyone doing? Good morning, Patrick. Good morning, Sterling. I did not see that one. Maybe because I didn't look at WAPO, but highly sensitive officers of Treasury Department, Chinese hackers. Fantastic. If the government can't keep things buttoned down, we know the government's incompetent pretty much at everything. That's why we should have a small government. Yeah, we know Carvana's numbers. I've been following that for years. And finally, Hindenburg came out with a report yesterday. If you didn't see it, it's fascinating reading. It's been a pump and dump scheme. I mean, the father was already in jail for fraud. Think it was fraud. It was for something. It's amazing what these markets are doing now. They believe everything. There is no due diligence anymore. The markets have turned into a gambling thing. But it'll continue till it doesn't, and I guarantee you, Carvana will not be the only company that just crumbles in the dust. Watch a number of these other ones. Again, you got a lot of zombie companies out there. Good morning, John. Good morning, Jacob. Yeah, here you Sterling posting it from the reporter. Research uncovered 800 million in loan sales to a suspected undisclosed related party, along with details about accounting manipulation and lax underwriting of funded temporary reported income growth. All insiders cash out in billions in stock. Pretty much it. If you want more, follow Hindenburg on X, and let's take a look at the report. Why do you need to go south, Richard? Good morning, Royal Palms. Good morning, Eric. Hello, Charles. Yeah, I like this. Even before considering our findings, Carvana is exorbitantly valued, trading at 845% higher sales multiple than relative to online car peers, CarMax, and AutoNation. Yep. Oh, it's hysterical because valuations don't matter until they do. Especially fraudulent valuations don't matter until they do. Tesla is another concern. I completely agree, but you know what? That's just with the 0 day options and everything else. Tesla's a complete gambling stock. It does not. It does not. Especially BYD now passed it in Chinese deliveries. So BYD is outgrowing Tesla and valued like under 1/10. The weather in Maryland. How cold is it? I don't know. We were 77 here yesterday. So, but my wife's in Chicago right now and freezing. So I can sympathize with you, Richard. Good morning, Tony. Good morning, Heinrich. All right. How's it looking today? I'm pretty much taking it easy today. We got the manufacturing PMIs coming out at 10 Eastern. And keep an eye on prices and employment, those components. That's what I keep an eye on specifically to see if prices they're expected to bump up a little bit and not drop below 50. Below 50 is a contraction in prices, but as long as they say higher. Also, when we do get the CPI numbers for January and February, they're also expected to bump up. So things are not looking good. What else do we have? What else do we have? Barkin speaking today, and then we got rig counts. Tomorrow we got Daly and Kugler speaking, and Sunday we got Daly. Come on, we don't need Fed speak. It's the final, last little break before we really kick it up. Do we need Fed speak? Final week of the NFL before playoffs. We don't need Fed speak. Map this morning. Adobe's down. Did something come out on Adobe? But everything else in Apple's down. By the way, Apple potentially triggering a DeMarc daily, weekly, and it could be following through with a monthly sell pattern. So we could have seen the top in Apple for a substantial amount of time. That doesn't mean there won't be rallies. That means it will probably not take out its high in any time soon. So keep an eye on that because that could be the first mega cap to really start breaking down. What else do we have? Let's see who else is here. Good morning. Happy New Year, Ted. Hope you're doing well. Talked to a friend yesterday that just released the latest edition of Random Walk Wall Street. Her takeaway is charts are not predictive. Well, I would disagree completely. 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 All right. So that's what we have in terms of sectors. Everything's up today. So we're still seeing the European bounce, and then we've been getting sell-offs until after the European close, and then it's buy the dip in the afternoon. So we'll have to keep seeing if that continues. Fed watch is still 88% for the pause. We're closing in on extreme fear. We're closing in on extreme fear in this very expensive 37 Shiller PE market. So, interesting enough, yesterday's close, even though it was by the end of day, now we're rallying a bit. By the end of day, this was the lowest close since Tuesday, the 5th of November, election day. So it's nearly round tripping. Now, we also took out the 87.5 harmonic. 87.5 harmonic. So we completed that little mini pattern. The next thing is if the Dow or the S&P closes below 58.66. That's what's key. Although in any rally, I'm watching for rollover plays. We're still in bearish mode on the daily. The weekly, we came down, dipped below the rotation zone, but it's going to be very interesting to see if we still manage to close within the rotation zone today on a weekly basis. If we do not, I shift to neutral, which means we bearish on the daily, neutral on the weekly, which really starts favoring sells for me, but we're not there yet. In terms of stuff today, we're back above the little critical support level right now, so got to go down to little charts here. If we start breaking down below 59.25, I'm looking at one pausing point about 59.14, and then we don't have much till 58.90. To the upside, we break out above this 59.40 area. There's a key pausing area right in here where we got a lot of volatility back and forth, but I'm really focused on about 59.44 and then 59.56 to the upside. The other thing is right about 59.80. This will come down if we don't rally that much, but this I'm watching the decreasing 8 EMA. Yeah, Biden blocks Nippon Steel's proposed takeover, so U.S. Steel's going to wipe out a bunch of jobs. They do feel like they were about 6 months ago. So, NASDAQ also confirming the double top, but not triggering it. So the double top's confirmed, but not triggered. All right. It may never trigger, but it has been confirmed. The key level I'm paying attention to on the NASDAQ today, just like with the S&P, I'm paying attention to if we break down below 21,200, you got a little pause area of 21,160, and then you don't have much until about 21,045 on a breakout. It's against very key little minor significant level right here, about this 21,280. Above there, your key breakdown is about 21,350. So that's what I'm watching. There's just, again, Friday, potentially low volume, shortened holiday week, would not force anything. This is the day to not be stupid. Take it easy. Dow, nothing's really changed in the short term. We got cycles turning up. We got a little divergence, so a lower low in the Dow, a higher low in the RSI. So next week we could easily see a bounce going into. But again, the only more sustainable bullish pattern would be the trigger of the double. Other than that, we still have the rotation zone in the way. But if the double triggered, the rotation zone would be out of the way. So that's the only way I can get overly bullish in the Dow. The Russell, again, this price action yesterday didn't invalidate the double, but if we rotate back down, it will be a triple. Key resistance is coming in. Just watch yesterday's high and low in the Russell. The VIX I mean, we're still trading mid 17s, but no real fear in the market. Up a little from the prior lows, but nothing substantial. The DAX, for all you DAX traders, pay attention to the high and low from yesterday. Looks like we're getting the first cross, and this is very key. 20,170 is very key resistance. The only way I could look at it from the bullish side is if we break and sustain a break above there. But the key breakdown level is about 19, just go with 20K. It's got to then sustain a close below 19,950. So, here we go. So in here, not expecting this to trigger, but it doesn't matter if I expect. We have a shoulder, head, shoulder. It's a little sloppy, and you can see it on the 4-hour because you almost got a double shoulder over here. But still trading it as a modified flat line. So it would have to close. This is why I don't expect it to trigger because it's still against the rotation zone, but it would have to close above 108.06 and a half in order to trigger. And then we might see a little reprieve in the yields, although cycles have gotten back to the top on the note futures. On the yields themselves, the micro yields, we do have the modified sloppy head and shoulders here. Shoulder, head, shoulder, modified neckline, horizontal neckline would need a close below this low of 4.484. Again, inverse, we're getting the cycle bottoms here with the rising rotation zone. That's the only pullback pattern I see. Otherwise, we're still in a consolidation, getting out of very overbought conditions. I'm still expecting us to tap off the 87.5 based off probabilities. The only thing that would shift my short-term view is if we did trigger that sloppy head and shoulders. Dollar index taking a little pause after yesterday closing above the 62.5. Now, we have a potential divergence with cycles getting to the top. So I'll be watching for more so pullback plays and then rotations back up. At this point, the very key support level is 108.20. And the magnet price is now shifted to about 112.74, 112.80 area, which would put us back to the highs in October of 22. So, again, these are probabilities, but unless this is one of the times where they don't work out, watching for higher for longer for the dollar. Crude. Follow through, still watching for this 75.50 magnet price. We got separation in the rotation zone, and we're trading now well above very key resistance. We have a key support area on any pullback between 71 and 72. Other than that, watching for us to potentially retest the October high area. Natty gas pulling back into the rotation zone, but cycle's still headed down. There might be a potential bounce buy set up next week, and then we're going to get this because this is looking like a primary pullback. So now Natty's gas, after hitting the 75% harmonic, has to prove itself, and we'll take a look at that next week. But there's nothing today. Gold finishing, you can see here, straight to the final target and finishing the double. Remember, that was a little short-term bounce. In order for me to stay short-term, take this wrong one. I want this one, please. Please and thank you. No, not thou. Let me do this. There we go. Now, in order for me to do short-term bullish here, what I need is it to continue with a move and a close back above 26.99, so 2,700. Otherwise, it's in the pullback area in the short term. And this could be just a double that's turned into a channel before we get one more push lower. Now, I'm going to be watching for longer term buy setups starting, in the next week or so, couple weeks. But that's the only thing. So if you were trying to trade this, I would be, and you're trying to hang on to something else beyond the third target, I'd be in trailing mode on that. Silver coming up here. Not yet triggering the double. It really needs a close above this 30.55 area, though, to be out of the way of the rotation zone. So that's where we sit there. Silver potential double bottom is still in play. Copper trying to trigger. Well, this technically invalidated. Sorry, I did not look at that 4-hour early. So that's off the table. But because that's off the table, we'll be watching for rollover plays back in the key resistance. Yen, so far sideways correction. This is not enough separation, so it cannot be a sloppy head and shoulders right there. So it's just watching again. We have the magnet price of 159.15 still on the yen. Nothing else there. Euro coming down, hitting the next minor harmonic, bouncing up. But any bounce in the euro is now in the key resistance area. So we will continue to watch for rollover plays. The euro with cycles at the bottom. And we'll see, because now we might be able to get another harmonic projection that would take us potentially below the 62.5 harmonic, which means we could return to parity over the next couple months. You want platinum? Here's your platinum. There's your platinum. Platinum trading against major support right now with a Tuesday to Thursday, because Wednesday was, remember, the holiday, it was a percent beat buy. You're getting a bounce against major support with a percent beat buy. So, with that, on a continued area, your key resistance now is right around 965 on platinum. What do we have here? Hold on, spiders. The double that never triggered is off the table. The double bottom, the double top in the spiders has been confirmed but not triggered. Key areas I'd be looking at today: 588.71, the majors 591.49. Very significant support is 584.50 area. The Qs, very key resistance is 516.80. Then on any rollover play, it's back to 510.23 for the gap fill. Above there, you're looking at 518.25 and then 522.43. Tesla, which after delivery missed yesterday, breaking down. This will turn into, we're at cycle bottoms and getting oversold, but I will start watching for rollover plays in this too. You want to look at X sterling. It triggered the weekly double top and it's hit the second target, which is perfectly aligned with the 200 SMA. Also, third target is just above the 50% retracement for the low. Yep, we talked about this a long time ago, and now it's back down that target and probably going to then hit this 20, that key area right there. Now, if we flip around the harmonics, for the next bigger term, if this is the way I'd look at it, with the 75%, then this could easily return to 87.5% on this major long-term run-up. So if you then want to extend it all the way down to the lows in 22, the next key area on a closing basis is 29.08, which again would take it below also the weekly 200 SMA. And you'd have a longer term magnet price of 2063. So that's where we're looking overall. This would not be something I try to bottom pick anytime soon in X. So that's where that sits. Broadcom, you still got the potential double top in play. Looks like nothing today will invalidate it yet, just trading back to the rotation zone. This could, if we strongly rotate back up, become a triple top. NVIDIA, not much to talk about here. So I mentioned Apple. Apple, which yesterday was a very bearish bar. We are getting nearly oversold with cycles getting the bottom, but I now will start watching for bounce plays to roll over. Roll over bounce plays in Apple. Sorry, I have the harmonics the wrong way. The only thing, again, we'll watch for a secondary reaction with getting oversold and coming in at the 50 EMA area, but at this point, have to get it back above 253 before I turn back into anything bullish mode besides a short-term bounce play. Thanks for that info, Charles. Glad you found a way to trade platinum. Or and Tony has too. All right. Yeah, definitely not financial advice. We do not give financial advice. We try to share information that helps people develop their own trading strategy and their own methodology so they can navigate the markets. That is the point. This point is to not call out trades or call out potential stuff. It's to show people things I'm looking at, and then maybe they can incorporate some things into their trading methodology and routine. And if you don't have a trading plan, you have no business trading. Let's just peek back at the S&P, and I'm going to wrap this one up early today. It's a nice Friday. So now things really changed. I mean, we're trying to break out going into the open above the short-term resistance area. So same target areas I mentioned prior, and that's really it. Everyone have a fantastic day, a wonderful, wonderful weekend, and I shall see you all back on Monday. Bye for now.